Robinhood just announced bad earnings, big layoffs, and another regulatory fine.
And it reminds us that price is not a competitive advantage.
Okay, Jack, before we jump into this story, we need to define the relationship. We need the DTR here.
We know what you might be thinking. Didn't you guys work at Robinhood?
Yeah, we actually did. We sold our first company to Robinhood, and then we worked at Robinhood for 3 years.
And isn't this pod still sponsored by Robinhood?
Yeah, you'd be right there too. Jack and I only have Robinhood ads in this podcast in the T-Boy Pod.
But this pod is not a part of Robinhood. We are an independent company with Robinhood as the exclusive sponsor.
And since we're an independent company, we have editorial freedom to cover whatever company, whoever we choose in the T-Boy Pod.
And since we're covering Robinhood's news today, we're going to pause the Robinhood ads in today's episode.
That's our policy. The way we see it, we just don't think it makes sense to hit you with a Robinhood story and then hit you with a Robinhood ad.
So without further ado, let's turn to the news.
Here we go.
Robinhood announced on Tuesday a hat trick of bad things.
Okay, here's the lineup. We got users, revenue, and trading volume all dropped big all last quarter.
Now, it is tough to compare Robinhood's results this year to last year.
It is.
Because do you remember the meme stock trading boom? It was huge for Robinhood.
Even that wild ride GameStop PR debacle, that couldn't stunt Robinhood's rise last year.
But in the year since then, monthly active users trading on Robinhood fell by 34%.
Okay, and then revenues, they fell 44%.
And assets under custody, i.e. like stocks in Robinhood accounts, their value fell by 38% since last year.
Ipso facto, stocks don't always go up, and a market downturn has popped the retail trading bubble.
That's the early takeaway. Now, one thing did rise for Robinhood, but it was a legal fine.
Yeah, New York State fined Robinhood's crypto division for not having sufficient anti-money laundering programs and other violations.
Add all that up, and here's actually the most painful news for Robinhood of all.
Robinhood CEO announced yesterday that 23% of workers are getting laid off.
Now, despite that hat trick of bad things, Robinhood stock actually rose yesterday as a result.
Yeah, it's one of these shocking things that just kind of like happens with bad news, but stocks popping.
It looks like Wall Street was focused on the layoffs and figures that paying fewer workers will hopefully improve the profitability situation at Robinhood.
But overall, Robinhood stock has fallen 70% since its IPO exactly a year ago.
It's been a painful decline. We've watched it the whole way because we own the stock.
This is Nick. This is Jack. We still own the stock. So Jack, what's the takeaway for our buddies over at Robinhood?
Price is not a competitive advantage.
Yetis, 9 years ago, Robinhood took the investing world by storm with no fee investing. It was, AKA, free investing.
But now, just about every brokerage and even some crypto brokers have dropped fees as well.
The lowest price, that was a short-term advantage for Robinhood, giving it millions of users and a whole bunch of momentum.
But now, Robinhood's lowest price is the same price as everyone else.
Yeah, so for long-term success, Robinhood needs a new competitive advantage.
New products, a brand people love, or superior user experience, those are all candidates.
Because price is not a long-term competitive advantage.
Thanks for T-Boying with us. Don't forget to like and subscribe to this channel for Pop Biz every day.